Well, it was the most hotly anticipated tech IPO since Facebook. Shares of Twitter soared on today, the first day of trading. Alan Martin is here with how the stock market debuts of these two social media sites compare.
Yeah, kind of opposites. You know, the chief operating officer of the New York Stock Exchange called it a giant poker game as traders kind of set the opening price for Twitter. But once trading was underway, the banker who led the IPO sent a one-word tweet. Whew. Here's part of the reason why. The major indices lost big. The Dow down 153, S&P lost 23, and the NASDAQ 74.5. With all of that negative, pretty easy to see why Twitter was a shining star. Yes, the investing world is all at Twitter about Twitter, but should you be? Financial planner Bob Goldman doesn't think so.
I think you should look at this kind of investing as investortainment.
In other words, whether it's Twitter, gold bars, or comic books, he says they're all interesting to watch, but don't sink a significant portion of your assets in it.
And I think you have to look at any new company as a risk, and any new tech company is probably a double risk.
But many are calling today's rollout of Twitter the anti-Facebook IPO. Twitter started the day priced at $26 a share, was up 73% to close just below $45. Facebook hit the market last year at $38 a share and eventually dropped to $17. KCBS Radio's Jason Brooks says there were a number of reasons for Facebook's free fall.
And it was a disaster for the company. It started at $38 and fell well short of that. And it was beset by a number of problems. First off, the NASDAQ had some technical glitches that hampered the IPO and the stock getting out there.
And he says there seemed to be more investor uncertainty about Facebook.
This big social media firm with a high valuation that really wasn't making much money. It had a lot to prove. Those two factors really dogged Facebook.
So while Twitter did a lot of things better than Facebook, Bob Goldman also sees a Twitter attraction and why people want to be a part of it.
In fact, we all are a part of it because we have so many electronic devices, so we feel more comfortable with that. It's a lot more exciting with the birth of a new high-tech company than it might be with the birth of a new salad dressing.
Certainly. Well, important to note, neither Facebook nor Twitter had made a profit at the time of their respective stock offerings, but raising about $31 billion today not only makes Twitter owners and employees rich, it does put a lot of pressure on them to turn a profit and to do it soon.
Yeah, everybody wants to get in on the ground floor, and Google is the great example. Sure. I bought it was $300 a share, now it's $1,000. Yeah. Apple, same thing. Yeah. There's a lot of pressure for the stock exchange as well today.
Yeah, there was. That was kind of interesting. The NYSE, the New York Exchange, did not want to suffer the same consequences the NASDAQ did when it got crushed by all those Facebook orders. So the New York Stock Exchange actually practiced. It had a trial IPO on a Saturday back in October to test the system, and I would say it passed with flying colors.
Somebody tested their website system then.
Oh, yeah.
Okay, good.
Yeah, not the government.
We got that one.
Right.
Alan, thank you.